Hey listeners, welcome to the Erica Rivera podcast. I thank you for coming back and listening to anything life, business, and real estate. So today we have Amber Guzman, the one and only Amber Guzman.
Hi, everyone.
She is a mortgage lender for Loan Suite, and she is one of the top lenders in Yuma County. So if you are looking to buy a home, refinance, or anything in that aspect or in that area, give her a call.
Yes.
We'll throw her information out there at the end of the show. So
yes, thank you so much for having me, Erica.
Yes.
It truly means a lot. Yes,
I'm excited. So today, I want to talk about credit scores. I know we all struggle with credit scores,
yes.
right? We think we know that, maybe perhaps paying off a credit card will boost our credit score. Well, I've learned the hard way. Paying off a credit,
we all have learned a lot.
Paying off a credit card isn't always a good thing,
right?
Especially when you have, there's certain criteria, formulas, and to boost credit scores.
Yeah, and this is why I'm here. I wanted to share with you guys a few things, important, factors into, that go into your credit,
right.
Pretty much credit scores, right? There are what we use, the numbers that we use that show your credit worthiness. If you are, able or capable of paying a debt back, right?
Yes.
And it is important for home buyers,
yes.
Because these are the numbers that we use
Sure.
to determine if you qualify for a mortgage. And also, it controls your interest rate.
Yes.
So it is very important.
It's important.
It's an important topic to talk about.
So people who are trying to buy a home, the easiest way to explain how important or what a credit score is the way we see it is, think of it as a financial report card, right? We have to keep, we go to school, we have to keep our grades up. Then comes a report card at the end of the semester.
And how did you do?
Correct.
Correct. Did you do?
So
are you passing?
Exactly. Let's get into credit scores and briefly talk about how important it is, but what truly makes up a credit score?
Yes, great question. So what I like to say is credit scores are based off of 5, important factors. The first main one being the payment history.
Okay.
Payment history. Are you paying your monthly payments on time? Do you have any late payments? All that good stuff. So what I like to say when it comes to payment history is, we all have a grace period of making that payment within 30 days. That is very important. Make your payments before even the due date, making sure that there's no late payments more than 30 days. The 30 days is what dings your credit score.
So after 30 days, it reflects in a bad way or in a negative way on your credit, against your credit score.
So, it does report back to the bureaus, and just one late payment can really impact that credit score. I've seen it.
How long
time after time.
Does a late payment stay on your credit?
That's a very good question. So a late payment, it could stay on your credit report for at least 7 years.
Oh, wow.
A long time. So,
okay.
And of course there's many tricks to it in some sense. I've had it to where I'm already in the process of a mortgage loan for a client, and he it was a medical situation where it was life and death almost, and this gentleman had a late payment, dinged his credit scores dropped. What we did was, I recommended, called that credit company, credit card that you have, that you had that late payment, and see if they can forgive that late payment. So he called, and it was an awesome transaction.
So you can actually, for example, if I have a credit card, right? I forgot to make the payment that 1 month because we get busy, life happens, and before we know it, we're getting that email, that dreaded email, or that dreaded letter, late payment notice or no payment. So look, for example, if I'm working with you to get a house and you say, Erica, let's try to ask for forgiveness, basically.
Yeah, that's pretty much what we're doing.
We call or write a letter, email, and chances are, so there is the opportunity. I'm sure it doesn't happen always or often.
It doesn't happen always, of course. Let's be real, right? Realistic here. Not always does it happen, but that, like I said, that particular situation was literally life or death. He was in the hospital, and he had enough proof,
Sure.
So it has happened, and they forgave him. And mind you, he had never had a late payment with this credit company, he's had for, 5+ years, so there was, once again, a great payment history with that credit card that, they had enough proof. You know what? He has never been late, indeed, and so they sent him a letter that they forgave him his basically. Late payment. They removed it off his credit. And, that goes a little bit into deeper into, we go deeper in, how can I explain it? We go more in debt into what we do, right? We received that letter from the guy. I uploaded it. I reported it to the credit bureaus, right? And that's what we showed.
So there's a lot of things happening behind the scenes.
Absolutely.
So you not only help people get loans, you also could help them repair their credit at the same time.
Yeah.
So, and that's what I try to explain to clients all the time is, talk to a lender. Let's talk to my lender. Yes, because not only they're like, well, my credit score is 600, and so.
And all it takes sometimes is to pay that credit card down.
Exactly.
That one credit card that which was going to lead me actually to the second factor on what controls our credit scores. We talked about credit history.
Yes.
Okay. The second factor is
credit utilization.
Yes, correct.
How much credit you're using.
Okay. Another important, factor is what ties into a little bit of how I ended my first factor was. It is very important because you could have a credit card, like you mentioned, you have a 600 credit score, and this client has this one credit card that has a limit of $300, and they are at $300.
So they basically maxed out their credit card.
Correct. They max it out, and and without even them knowing, they're just, hey, I'm using it because I'm supposed to use it to get my scores up. And with just that one small thing, by paying down that credit card, and speaking of utilization, what it is the balance that you have on that credit card. For the most part, I always recommend to all my clients keeping it at 30% or lower of the balance. Okay. So that is that's always the key, the key percent on what we should be doing, all of us. But of course, ideally, in a perfect world, I'm talking, I do recommend the 10%, having it active, having a small slight balance, but keeping it at that 10%.
Okay.
So it is important, it is important to have that balance as low as possible at all times. So that's,
use it to fill up your tank with gas every once in a while, or whatever the case may be.
Correct. Yes.
So, but don't use it to go out to on all these
because remember,
fancy dinners.
We are getting this credit card to be able to prove to the credit bureaus that we're able to repay back that debt.
And we're responsible.
Yes, exactly. So if we are getting that credit card of $300 and we go and max it out right away, we are just showing them, and especially if it's a short period of time, which takes us in to number 3. The number 3 factor, right, on what is controlling our credit scores is, once again, tying it to number 2. They all tie together somehow, right?
Yes.
Is the length of time you've had a credit. Okay. So once again, we have this, I have this first-time home buyer and they have absolutely no credit. I recommend them to go open a credit card, but then they go and use it. They open a $300 credit limit, credit card, and they go and use $300. That's not showing the credit bureaus that you are capable of paying it down. Not necessarily paying it down, just simply, whoa, you're using it
right. It's like
right
it's
away.
like shock, right, to the credit card companies.
Exactly.
It's like a kid in the candy store. You go in and you want to buy everything.
It's a true story. It truly happened to me. So do you mind?
No, go ahead.
Okay,
Yeah,
okay.
absolutely.
So it really did happen to me. Honestly, I've once again, we're human, right? And we've all had our experiences and stories when it comes to credit. True story. I literally was in high school. I was already 18 years old and going to American Eagle.
Of course, kid in a candy store.
There you go. I'm at American Eagle and I go up to pay. I mean, I had money to buy stuff, so I go up and I'm ready to pay. And then, of course, the cashier, hey, you want to open up a credit card, Yes.
Oh,
so you want to open up a credit card. And I'm like, well, and I'm going to be honest with you once again. I'm new to this, right? I was new. I had no idea. And mind you, if we go more in debt, with all due respect to my parents, they never talked to me about credit.
Right.
They never talked to me about credit. So I never knew what or how it was controlled. Yeah. And I'll tell you what, my parents, the reason why I think they never spoke to me about credit was truly because they've never had debt. Till this day, my parents do not have debt. They probably just have their small little mortgage that they have that they're about to pay off probably. They just never believed in that. And I think that's what it was kind of more like, just don't even bother with credit.
And some, especially in our parents or grandparents, sometimes they see debt as bad debt, right?
Yes.
But there's such a thing as having good debt.
Correct.
Right,
yes,
right.
exactly.
So American Eagle?
American Eagle. So I'm at American Eagle and then I go and of course they offer the credit card and I'm like, well, okay, yeah, sure, whatever. They run it. They're like, you're approved for $300. So how that works. And then, you can get all this for not paying a dime out of your pocket,
20%
out of
discount too.
I think they did add like a 20% discount, 10%. I don't know, but it was a great deal. I'm like, are you telling me I could pocket this $200 that I was about to spend? And that's how they tie you in. But okay, my story being, I took the chance. I got that credit card. I never even bothered on waiting for a monthly bill because they didn't explain, that to me. And once again, like I said, ignorance, right? But I didn't know that I was going to get a bill in the mail. I guess I don't know how that works. So yes, credit history, it's very important. Don't, just because you get that small little credit card, it's not good to max it out. It's not good to right away put a huge balance in it. And like you said, yes, use it. Go pump gas, $60. Yeah. Go pump gas, small little, fill up your tank and then
pay it off.
Yeah.
Pay it every month. Do that once a month just as a stat. So you're establishing credit.
Yes.
You're telling the credit card company, hey, I'm a responsible credit user.
Yeah, there you go.
So little by little, right?
I'm able to pay you back. Look at this, and that's how it is. Like you said, it's literally a report card where we are trying to have that good credit score to be able to show our parents, show our in
that
this case, show your mortgage lender, show your mortgage lender, hey, guess what? Look, I'm able to pay back this mortgage that I need,
Okay. Yeah. So how did that impact your credit score? I mean, did you know what your credit score was at the time and how did it impact you?
And that's a thing. I once again, I didn't even know that what the credit bureaus were. So just a brief, as we all know, or maybe just like me, I didn't know, so for our audience that is not aware of what the credit, report, your credit scores are, there are 3 credit bureaus that are looking at that, and one being TransUnion, Equifax,
and Experian.
Yeah.
So it's like having 3 teachers, right? Like we're getting 3 different report cards. Yeah.
3 different.
All right, you have 3 teachers and you have 3 different report cards.
Yeah.
All right. So
Yes.
Okay. So then, the type of credit, length.
Yes. So length. Yes. that's the third factor that we're talking about. Is it is important. I've had clients, the length of that credit card that's been open, meaning I just had a credit card open 3 months ago. I'm gonna be honest, I've had my first time home buyers that are fairly new to the credit world, right? And here they go, I run their credit and they have no scores yet, even though they opened up that credit 3 months ago. After the 6 month is kind of like, honestly, after the 6 months is when a credit score actually takes action and starts reporting to your credit bureaus. But I've had it to where clients still don't get approved. Once we run the file through the system, through the system that we use for underwriting, it might even kick it back because of that length of it's such a short time that it's been open, and there's still it's not strong enough. It's not strong enough to show those credit bureaus, what, she or he is indeed capable of paying this debt back. So I do want to add to that. I've had it to where there is a first-time home buyer and a parent adds them to their credit card. That is one thing that I've recommended in the past. It has happened. It has worked. It's
so. Okay, so that's interesting. So what do you mean so a parent adds them? So you're saying that I'm a first-time home buyer, right? I have had my credit card for 6 months, and you say, Erica, that's not enough time. In the eyes of the credit bureaus, the 3 teachers, you're still not responsible enough, or you haven't proven yourself enough to where they're okay with
lending you $350,000 home or $250,000. Correct.
So what you're saying, and let me see if I'm getting this. So what you're saying is that if my mom and dad add me to their credit card, that might boost my credit score?
Yes, absolutely. Of course, we have to make sure, like everything else, there's factors, right? Sure. There's rules. There's
case by case.
Exactly.
Also, yeah.
But of course, the parents have to have that good history, good credit score. And yes, of course, let's say that mom and dad have that credit card, that, let's just call it, I don't know, Navy Fed credit card. They have a line open with them. Their balance is $3,000 and they only owe $100. That's great, right? That's a good balance. And parents' credit scores are in the 700s. They're amazing. They're almost at 800, That is when I absolutely would recommend. You have to obviously have that talk, and make sure, I don't want to get you added into, your mom's credit card that her credit is barely at 620. You know what I'm saying?
Right.
And it's like, I'm not going to recommend that.
So it's not like they're co-signing for you, but they're just basically what they're doing is taking you under their wing, saying, hey,
here you go.
Credit bureaus, my kid's financially responsible so much that all of my hard work and all of these years of being responsible, I'm willing to take this person and vetting for them, basically like stepping up to bat for them.
Exactly. And that is called adding them as an authorized user. They're authorizing their credit to be, you're able to use their credit or be on their credit.
Sure.
So yeah, and that could take about 30 business days in order to reflect in your credit. So that's actually one of like how could I call it? Kind of like a cheating way, that we've done.
A shortcut. That's what it is. It's a shortcut.
And hey, it's all about helping these clients,
Absolutely.
right? That's at the end of the day, that's what we're trying to do.
Right.
And I've had that happen. Even when husband or wife, they're in need of a little bit of boost on their credit. I'll have them get added into a credit.
And that's a great way. That's actually a great tip for first-time homebuyers because parents may not have the resources or the funds to gift them a down payment or help them with the down payment, but they do have the perfect credit score or the great credit profile, and that's how they can help, and that's how they can contribute to helping their kids. Okay.
Yeah.
Now, does it have to be an immediate family member, or can it be my neighbor?
You know what? I mean, how can I say this where I'm not, I'm not going to say something incorrect, of course, or misleading, Yes, it can. I mean, I've had situations where it is a friend or a cousin, you know. There's not a strict rule where it's like, it's, you know, it's not, we're not talking about a FHA gift letter here or a gift donor, you know, where it has to be a relative, not like that serious, but it is, you know, just trying to, and let's be real, sometimes it's even hard to find that one person that's willing to give you that signature, you know. But anyhow, yes, it is doable. It is.
And of course, it's a case by case basis. So they really just have to go and talk to you and say, hey, I have, you know, my best friend who can help me with adding me as an authorized user. It's going to boost my credit score. And that's, you know, what can we do?
Set a plan, right? There's always going to be a way to set that
But that's
plan.
why they're not necessarily, they don't have to go to a lender. They don't have to go to you to, when they're 1,000% ready saying, Amber, I want to buy a house. I'm ready to buy a house. No, we can set up a plan. That's why they go to you, is to set up that initial strategy and boost their credit score. And you know, so boosting your credit score, right? We sometimes we need help. We need a boost. It's a lot easier than people think. So we talked about how we can have parents. We can be added as an authorized user if we need a little boost. And how else can we boost our credit score?
So of course, that's one of the main ones. Another one, I mean, like I mentioned a little bit of it, is you have that credit. I mean, I've had a lot of clients come and say, I don't think, my credit, I don't want you to run my credit because I don't think I'm able to purchase a home right now, you know? But it just takes that one little small balance for me to tell them, hey, pay this down credit card down to this balance, you know, less than the 30%.
Right.
And sometimes it takes it to the 10%. But anyways, ideally it's a 30%. You know, that right there itself gets to the 640 credit score that we need,
so
you know?
I get a lot of people, and I'm the same way. Like I'm skeptical, or I'm not going to jump into having my credit score run, because we know sometimes that's not ideal, right? Especially if we're getting ready to make a major purchase or something along those lines. But sometimes there are times, especially if you want to buy a house, and if you're serious about buying a house, we need to see this credit score, right? So I see it as like a fishbowl, right? And you're on the outside looking in, and me as a buyer, I'm in this fishbowl. You have to see what's in there, which is my financial profile, right? Because running a credit score, or running your credit will determine, you'll be able to see all of the credit cards I have, any loans, how many car loans I have, and how many times I've been late on my payments, et cetera, et cetera. So that, you know, that's important. So again, you know, if you're serious about buying a house, you have to have your credit score run, or your credit, credit run.
Yes. So that is going to be one of the main factors, is the credit inquiry. So a lot of people do think, oh my gosh, don't run my credit. How many points will it drop? You know, let's clear that. Let's clear that up.
Let's clear that. And then let's talk about the two different, there's a hard credit inquiry.
There you go.
And then there's a soft credit. Okay. Yes. So let's talk about these myths. Let's dive in
on that one. Yeah, let's clear that up, because it is, it is an important topic to have. Okay, so soft pull. That is this is the thing. There are those two different types, right? We do a soft pull and a hard pull. On the soft pull it is when I have that client come in and say, hey, I just want to see, just give me an estimate, you know, give me an estimate. Don't run my credit. You know, I just want to have an idea.
I want to have an idea.
So that is when I considered, yes, absolutely, let's do a soft pull. And that I could still see their credit history. I could still see their balance. I could still see all that. And they're estimated. And I say estimated because it's not the hard pull, right? I say the estimated credit score. And that is good enough for me to be able to see, or be transparent and see their report card, you know, hey, let me see your report card, you know.
I want to see those grades.
Let me see those grades. Yeah, there you go. And where I'm able to, yes, I can indeed determine an estimate with a soft pull, you know. And what that soft pull is, it's not a hard inquiry on your credit, you know. In other words, no one will know, not even you will know that I ran it unless, of course, I had your authorization,
correct,
permission to run that. But I mean, it won't be a hard pull. You won't see it in inquiry.
It won't reflect. It won't drop your points down.
Correct.
It won't impact your credit score,
Correct.
anything like that. So a soft credit pull is what it's
there
called.
you go.
So when our listeners want to go and they're like, Erica, let's buy a house, or I want to buy a house. I'm going to say, let's go talk to Amber.
We're talking about the clients that are like, I want that house. And it just came out on the market and I want it now.
Correct.
Those clients that are ready, they're ready to make a move.
Those are going to be more of a hard inquiry. Okay. So so viewers out there, you're thinking about buying a house maybe in the next 6 months, but you don't know where you stand, what your mortgage payment's going to be, et cetera, et cetera.
You want to get an idea.
We get a soft credit
pull.
Okay.
Yes, a soft pull. So, and now, yes, the hard pull, I also, very important to clear up. It's no more than 5 points. And that's like a temporarily drop on your credit score. It's never been drastic. Everyone has that myth that, oh my God, my credit score is going to drop. Honestly, out of like all the years in lending that I've had, I have never had a client come back and say, oh my God, my credit score dropped 20 points,
Okay, so a hard credit inquiry, hard credit pull, those are the buyers that are, Erica, we're ready to buy this house. I love this house. I want this house. Let's put an offer on it. I'm calling you, Amber. They're ready to go. They want this house. They're ready to submit an offer on it. We need a pre-qualification letter.
There you go.
So that's
those are the ones that we don't think about it twice. It's going to be a hard pull.
Okay, so hard credit inquiry, credit pull.
And there's a lot of behind the scenes, like you mentioned earlier. And one of the things is, just to make it clear, I mean, a soft pull, I can't even run it through the system. It'll kind of kick it back. In other words, there's no really credit report that could be read, through our system. So it's just, like I said, it's just to give us an idea. And once you're ready to make a move and go put the offer in, yes, we go back in, to your file and we do what's called the
hard inquiry.
And then we're able to really run the scenarios.
One thing that I think a lot of viewers are asking, I'm sure, because that's my question. This is my question is, can you go from a soft credit check to a hard credit check without my authorization?
You know what? For the most part, absolutely, you need to ask that buyer. There has to be that conversation that you have. And that is, to me, very important. I mean, I've had it to where it's a new build. And it's a new build and those take 4 to 6 months. I mean, I have one right now, 10 months, in the making. So I've had that. I'm not going to go off and run once their credit report. Oh, another important, important point is credit reports on our end for mortgage is good for 4 months. Okay. So that is a very important thing to keep in mind, because once again, let's go back to that story where I have these buyers that are on, their home is under construction. It's going to take 6 months to build. And I know that their credit's going to expire in 4 months. I make that phone call. Hey, Mr. and Mrs., I'm going to run your credit. I'm going to run it. And obviously that comes with a lot of conversations in between. Hey, don't use your credit. Don't open a new credit card. That is already kind of set since the day one. That way we don't have any problems when we're ready to close, when we're ready to rerun that credit and close officially. So Amber, I'm a serious buyer. I love this house. I want to submit an offer on it. I'm ready to go. Okay, you say, Erica, congratulations. I'm excited to help you. Let's run your credit. Okay, so you run my credit, and on average, it'll go down. You running my credit will drop my score by 5 points or so. 5 or less.
5 or less. Okay, perfect. That's great information. Now, taking into consideration that you ran it and my credit score went down 5 points because I'm trying to buy a house. Do your underwriters take that into consideration? Like, they'll see what my score was before and now know, okay, her credit score is going to be 5 points or so less because of this.
I love that question because I want to add to that. The cool part about that is that your credit score won't change. Let's just say, right, that we have a buyer that is wanting to purchase a home, and this buyer goes to 4 different lenders within 30 days.
Ooh, shopping, yes.
Yeah.
And okay.
Okay. Unless they're not shopping me, you can recommend them to come to me.
Absolutely.
But with that being said, it is a fun fact that the credit bureaus will actually take that as one inquiry.
Okay.
Anything that occurs within 30-day period is considered only one credit inquiry. So,
wow.
I mean,
that's interesting information.
It's pretty cool. So that's a pretty cool fun fact that, I mean, they can go and do anything within those 30 days and it's not going to be, probably it's just going to be the 5 points, and it's not going to be, let's say they go to 4 different banks, it's not going to be 5, 10, 15, 20 points. You know what I mean?
Right.
It's like, it's just
one inquiry within a span of 30 days.
30 days.
And it goes down. Okay. It could go down.
It could go down the 5.
Which, and that brings us into lenders, right? I do recommend, because I know if I send them to you, my clients, they're gonna love you, right? They're gonna be like, she's on top of it. She's a hustler, motivated. Let's go, right? Let's go. But they need to know why they're working with you, right? Because they know that they're gonna get great service, they're gonna get attention, and you're very detail oriented. But if they want to go and talk to another lender, I encourage it, because that way they have that comparison. And sometimes they're like, oh man, we should have gone with Amber. But
let's be real. I want to believe that it's not necessarily always about the customer service. Absolutely, that's super important. I think it's the interest rate that is the main, what I've seen, happen. I could bend backwards for someone and be available every single day after hours, and I've done everything I could to make this client happy. Then here comes another bank that gave them that slightly lower rate, that caught their attention, So
yes, but let's talk about that story we had or that client we had who started working with you, right? And
are we talking about the one from Phoenix?
California.
Oh, California.
So bought in Falls Ranch, your next door neighbor. And so
that one. I'm sorry, I was talking to, you know what? Okay, yes, that's a good one.
That is a great one, because this is exactly what we're talking about. So, started working with you, completed the application. We went shopping. We got them under contract with for a beautiful home.
Beautiful home.
And so
they decided to shop me.
They decided, they went shopping.
I once again, I gave them my customer service.
Yes, you're right.
I was there from day one, and then they decide we get
to go to
a
national company.
Bank. I believe a bank that had helped them in the past. They decided to get that second quote. And that's a good story to tell, because they thought that they could beat me. They thought that they were going to get a better deal, and
so what happened is, called me, Erica, we're going to go with this lender instead. And they're based at, this particular lender was in Northern California, I believe, if I remember correctly.
It was.
So, I call you, Amber, hey, this is what, and at the end of the day, it's what our clients want, right?
Exactly, yes.
So
absolutely.
They thought they were getting the better deal, the better experience. So we're getting ready, to close? Maybe 2 weeks into it, we needed an appraisal ordered.
You know what? Everything was ordered already. Don't you remember?
Oh,
everything
that's
was done
right.
in the bank. They just thought they were going to get a better rate. That is really truly what it was, and a better rate, and I think even down payment or something. But next thing you know, this bank didn't deliver.
Disappears.
Well, they disappeared, but they didn't deliver what they had promised and what they were going to do for them. So,
and then, so I'm starting to work with this lender, send an email. I heard back from them, and, thank you. Send us all the documentation. We'll start processing this loan. What happens then? Gone. I kid you not. They disappear. Everyone, not only the lender, but the entire team. I had to basically take it to the next level, went to management of this national company, right? Well-known company. And crickets. Never got a response. So my clients, are getting ready to move from California too.
Yeah, because remember, they're not the only ones in the mix. We have the
Correct.
sellers. We have the sellers trying to get.
Sellers are they're
ready,
moving out and cleaning everything
Yes.
up and prepping to, for their purchase. So it's a domino effect.
It is
It's
a
always
domino
going to be a domino effect. So then again, these lenders never heard from these lenders ever again.
Yeah.
So you came in.
You called me. You said, guess what? What's going on? And mind you, I have always had a good intuition. And that file in particular, I remember I didn't cancel it. I let it be. We were already under underwriting. I mean, I had already done everything needed in the file to get that final approval. So everything was absolutely in the file. It was locked. I think everything.
Yes, the rate was locked. Appraisal was ordered.
And I let it be. I let it sit there. And then you called me and I'm like, I can close it. Let's do it. And we closed it.
In like 5 days or something crazy like that.
It was crazy. That was a cool story.
Yeah.
That was a good one.
That was it. But so lenders, I mean, it's just because you were thorough in your work and you still didn't, just go ahead and cancel it.
Yes.
But that's important. I think that spoke volumes of you because you didn't take it personal. They said, hey, I know you've done all this work, but you know what? We're going to go with someone else.
Yeah.
And of course, it could be discouraging because we put time, effort, energy.
Yeah, I'm telling you, that file was already in underwriting.
Yes.
I had gone that far already.
And you kept it open. You didn't completely close it. Had you closed it, that deal would have fallen through.
Yeah.
And they were already in the process of moving down. The sellers were in the process of leaving the state, and it was just
that was an awesome story to tell for sure. Yeah, because that is true. We made it happen, but
we made it happen.
Yeah, we did.
I mean, we've made some crazy deals happen.
We have. Oh my God, that's another episode.
Yes, I know.
Of all the
stories
transactions that we've
crazy
had,
real estate stories.
Cool ones.
Yeah.
We've had cool ones, and I've had. Honestly, I mean, you've bragged about me, but let me brag about you. You are an awesome,
thank you,
phenomenal realtor. I mean, come on, let's just do I have to say much?
I appreciate it. Thank you.
You are amazing. I mean, I know that the moment I give that pre-qual over to you, that client's gonna find their dream home, and you just have that power. You have that, that's like one of your.
Well, because I meet with my clients, and it's all about knowing what they want. It's all about getting to know them. Listen.
I heard one of your episodes.
Yes,
and you talked
listen
about
to them.
that.
Listen to them. Know what they want. Almost.
I love that.
It's like. You need to become part of the family, because you need to know what they like, what they don't like, because it's building a relationship. I'm not going to get into a relationship if I don't know, what your favorite things are, what you don't like, or, that's exactly like house shopping. We need to know what they're looking for and what basically they truly want to buy.
Yeah, I love that. And it is so true. It's just the listening to them and taking a step back, and that really understanding what is that what is that they're looking for.
Right.
Which honestly, Erica, it ties into what we're here for today, and it is talking about credit.
Yes.
Credit is a big factor as to interest rate, which is the main topic right now. Everyone's talking about main interest rates. Everyone wants to know, where are the interest rates at? What rate can I get today? That's like the main. I don't think a day goes by.
Every single day.
I do not hear that question or hear that word. Because it is important. And sometimes when it comes to me trying to determine that interest rate, what rate am I going to give them? It is tying. Your credit score is really controlling that interest rate, so as much as I hear my clients out and they want the lowest rate, if I go more in debt as to, yes, you have your credit score at, your credit score is there, it's eligible for a mortgage. However, your credit score, let's just say it's at 640. And you want that 5.99, right?
Don't we all? In today's world, we want that. Anything in the fives is good.
Anything, you hear a 5 and you're like, I want it now.
Yeah.
But no, seriously, you have that that client that has that 640 credit score and they want that 5.99. It's like, there's a cost to that. There comes a cost with that interest rate, so the better your credit score, the higher, I should say, and the higher credit score is, the better rate you will get, the better cost to the rate you will get.
So, and that's also a great, that's a great tip. That's great information. Having the higher, it's basically the stronger you seem, credit wise, the better the chances are to get a lower interest rate.
Absolutely. So, the lower your monthly payment will be, the lower the higher your credit score is, the better the interest rate, the lower your monthly payment will be. Right. Trickle domino effect.
Yes.
It is what it is.
It is what it is, unless you have a massive down payment, large down payment. Your mortgage payment is going to be minimal, but yes. So lots of factors to take into consideration.
Absolutely.
But we wanted to give tips and tricks on how, on how to work on your credit score. That's where it starts.
Yeah.
Every single person who has come to me who's been a first-time home buyer or someone who and credit scores, I mean, almost anything impacts them.
It controls your life.
Exactly.
It controls your life.
Even renters, they don't know that.
I've heard that they run credit. They do a credit check, right?
And if you're renting and you're going through a property management company, they're reporting these late payments to the credit bureaus.
Well, let me add to that I also take that in consideration. Absolutely, obviously, what your credit bureaus, right? But when you are purchasing a home, that is super important to have that good rental history.
Yes.
And if, you do have a late payment or two, ding, it's going to ding your credit.
Absolutely.
And not that they report it to your credit bureaus, because I don't think rentals report it to your credit bureaus unless you go into collection or
Correct.
something. There are those.
And then they'll ask, okay, well, how many late payments? So a lot of different factors.
But yes, where you were going with that is where you had mentioned, it's not only necessarily purchasing your home, it is purchasing your car.
A car.
Getting that rental property, that you're trying to rent. It's your credit is so important.
It is.
And let me add to that how important to me it is super important to always check your credit. Always.
Yes, that's great information.
Yeah, always check your credit. It does not hurt.
So on average, so I'm thinking about buying a house in the next 6 months to maybe a year. How many times or anything, me as a working person and I want to make sure my credit is it remains great. How many times should I be checking my credit score on average?
So I want to say absolutely annually, at least once a year.
Okay.
At least once a year. And the cool part about it is that many people don't know. So once again, to our amazing audience that is listening to us, there is a website and it is annualcreditreport.com.
Annualcreditreport.com. Okay.
And you can actually check your credit for free.
Okay.
No credit inquiry. It is for free. So I'm, this
great
is
information.
This is awesome to know because most don't know,
Yes.
It's just taking a peek at your credit. Where do I stand as of today,
Right.
And I know a lot of people go and they get those apps. There's a lot of credit apps nowadays, credit, I don't know, Karma,
Credit Karma, even experience, there's credit. Or Find My Credit Score, I think, or something like that.
And I think I'm saying it wrong, but don't hold me accountable. But there is tons.
Even the 3 credit bureaus, you can find your credit for, you can get like a basic or overall.
Sometimes even through your bank, right?
Yeah.
I've heard clients say that. Oh, through my bank app, it's here.
Yeah, well, I know a lot of the major banks offer that for free, and they give you an annual report as well for free. Yeah. But
they're not always accurate, by the way.
Correct. Like Zillow, Zestimates.
Oh God, yeah, that's hilarious.
That's another episode.
Always cracks me up. I'm like, that's not what my house is worth. But yeah, no, it's pretty cool to know that there is an existing website that all of us can absolutely jump in and check our credit score.
Right.
Once again, for free. You get one report for free a year.
Annualcreditreport.com. Annualcreditreport.com. We'll throw it on the screen for the viewers, for you viewers to be able to go to it and get yourself set up.
Yes.
So also at the end of the show, we'll put Amber's information up on the screen.
Call me. There's
Call
nothing
her, message her. Yes, absolutely.
Yeah.
Any questions, even if you have a simple question, just send
There's
her a
no
message.
stupid question.
No,
absolutely
not.
Stupid question.
No.
And they're all valid.
Never.
And honestly, it's we're in the real world,
I know.
So
we hear it all.
We hear it all.
We hear it all.
I've seen it all.
Yes. Yes.
Hey, I've lived it through.
Yes.
I've lived through it.
Yes.
So once again, credit history, it's super important.
Yes.
Your credit scores are super important.
Yes.
They control our entire life.
Oh, they do. They do. And I think the biggest, so especially, and I'm talking more like first-time homebuyers, because I feel like we need to guide them, right? They need the education.
Yeah.
They need the guidance because they've never done that. It's a very, very rapid, fast-moving process with lots of different factors, a lot of things involved, a lot of things happening behind the scenes.
Yes.
But I've had deals fall through because, mind you, under contract, congratulations, in 45 days, I'll be handing you keys to this brand new home of yours. And what do? Amber, a week before I hand them keys, I mean, my poor clients excited, right? They go to a furniture store.
Let me buy that couch that I
for the house that I'll be moving into in a week. So run the credit. They buy $2,000-$3,000 worth of furniture, and then I get the call
from that mortgage lender. They no longer qualify. Yeah. So, that is, and once again, it ties, let's be real, we're all human, right? But it does tie back to the lender. Having that conversation from the beginning with our clients, educating them. There you go. It's just educating them, letting them know, listen, if you do this, this, and this, you might not qualify. So, I always, and because for the same reason, I'm not going to sit here and say I've never had problems and I've never had my issues with credit with clients and all that, but I've learned my lesson, and it's one of those where it's like you have to have those conversations from the beginning, you know. I've had it to where clients use that credit card that they had already, and remember, when you are in process for a mortgage loan, there is this click little button that the underwriters turn on. It's a monitor, and it's monitoring your credit. So it's watching every move that you make. And what happens is we've had it happen, we're in process, and guess what? They had an inquiry here at Chevrolet. What happened? And there it is.
Yes.
They wanted to buy a new car for the new house.
For the really nice two-car garage. Yeah,
there you go. So and it's just having that conversation.
So do not buy a car. Do not buy furniture. Don't buy appliances before I'm handing you keys.
Yes, that is funny because I always say that to my clients when I have that conversation with them is until you receive those keys and you hear the words we have recorded, you can do as you please with your credit. You can go and get that car. You can go and get that furniture.
Let me hand you the keys, and
your
then
home
go.
is not yours until those keys are handed to you.
Exactly.
And that's literally the way I kind of put it in their mind, like it in their head.
And I think and that's, and I say this to my clients all the time. I say this to my clients. If you have any question whatsoever, any doubt, anything concerning your credit, call your lender. Call Amber. If she's not available, call me. I can say, it's pretty
self-explanatory maybe to us.
I'm more than happy, any credit related or lending related question, if it's a little more complex, then, I'll say, hey, let me get a hold of Amber and, we'll get back to you. But do not touch your credit card. Leave it in your wallet. As a matter of fact, you know what? If you're under contract, take your credit card out of your wallet and leave it at home.
There you go.
Leave it at home. Put it away.
Put it away.
Because
hey, don't forget to make the payments. But just because you're putting it away does not mean you're
still responsible. Yeah. No, you have to make sure make the payment and do not use your credit card.
Do not use it. Don't use it. That's just, once again, it's that having that conversation and helping them understand how important it is, you know? Because I've seen it happen.
Yes. No, great information. Fantastic episode, I think, because I feel at least we should have connected at least with one person who is thinking about buying a house.
Yes.
Or considering, maybe in a year, not right now, it could be long term, in a year we'll buy a house. But yes, great information. And we go way back, and we've had some great times together. We've had some almost impossible transactions.
Impossible. I know. So, I think, I've honestly, not because I'm sitting in front of you, but probably one of my most challenging and my most amazing stories have been with you.
We've had some.
So we've been through it all.
We've been through it all.
I mean, gosh, that's like I said, that's for another episode. But we have some stories to tell.
That's almost like a therapy session right there.
I think next time you're
real estate therapy. I should start a real estate therapy for realtors and lenders.
Yeah, there you go. Yeah, come and let it out.
Yes, let's talk.
But you know what the beauty of that is once again, the way I live the way I say it is you live and learn.
Yes.
Am I going to make that mistake again? Absolutely not, it's good information. It's good to know. It's good to talk about. We do have a lot of buyers, and even I was going to throw that out there, Erica, when we were talking about one of the factors, actually about checking your credit. I kind of want to throw that out there.
Absolutely. Go ahead.
So for credit, checking your credit, annually, I do recommend that, because this is why, even if you get those keys, even if you've already closed, you've already live in your home, what if the interest rates drop? Because that's what we are all hoping and praying for. We are waiting for those rates to drop.
We're waiting.
Because that happened. Remember, who doesn't remember? 2020, we had those crazy rate drops. And a lot of people weren't ready.
Yeah.
Credit scores too low. And I'm going to be honest, too high. It happened to us. Me and my husband, we had just closed on our home, and we weren't credit worthy ready, and that was the time to make those investments and all that good stuff. And so it is, once again, I do this for a living, but I'm human, and I'm telling you guys, it is important to check your credit scores. It is important to keep that, straightened out at all times, even after you have your house and your car, because there's those opportunities that you get to when you're ready to refinance. Make sure you have that credit score.
You have to be ready. I always say you have to be ready, so you never have to get ready.
Ooh, I love that.
Yes, absolutely. Always be ready, so you never have to get ready.
I love that. Yeah. So, I just wanted to throw that out there, because, we get comfortable.
Yes.
You're like, oh, got my house. Okay, let me go, get all these credit cards.
Yeah, and it happens. I mean, if the rates drop down to 4% next month, who's going to be ready?
Yeah. Who's going to be ready? That should be the question.
Yeah.
Are you ready?
Are you ready?
Are you ready? Like, ask that,
for the refi boom.
Yes, there you go. Because there is going to be that.
There will be a refi boom. Yes.
And to all our past clients, all, the clients, our future clients, just keep that in mind. It's very important.
Yeah.
Once again, credit is running your mortgage, ability to get a mortgage.
Yes.
So
absolutely fantastic information. So, okay, so I want to wrap up this, but kind of do a quick recap, right? I want to do a quick recap and do maybe like a what do we call
like a quiz? Were you paying attention? Where were you?
Showdown. Oh yeah, a recap. A credit score showdown.
There you go.
Let's do it. Okay,
let's do it.
Yeah, let's do a credit score showdown. I am going to ask you. Oh, I know you are. Yeah, you are ready.
Are you guys
you
ready?
Have to get ready. You are ready. I'm going to ask you 5 questions or so, and I'm going to give you 30 seconds to answer this. Okay, so true or false, right? Okay. And then if you want to quick little explanation for our viewers out there, it'll be exciting.
Okay,
so
let's do
I'm going to grab my phone and go down this list of questions.
Nobody saw that, or I don't know if you guys saw that. Maybe you saw Erica's reaction, but I think we almost tilted back. We almost my heart dropped a little bit.
Oh my God. We almost
yeah, seriously, that would have been hilarious to catch.
Oh my God.
Little tilt. I was like,
talk about blooper. That is a blooper of bloopers, I think.
That would have been hilarious.
Okay, so tons of great information. Love it. I've learned a lot from this episode just by sitting here and talking to you. So thank you for sharing that information with me, because I can always relay that to to our clients. So, okay, so I want to do a quick little recap, kind of, keep you on your toes and see, so I want to go ahead and for our viewers out there who may not have tuned in the beginning, maybe do a quick credit score showdown. So I'm going to ask you a series of 5 questions. You have 30 seconds to answer. It's true or false, and then maybe give us a quick little explanation on each question. Right? Okay.
Ready?
All right. Always be ready, so you never have to get ready.
I love that. I'm gonna use that from now on.
Do it. Absolutely. Okay. So Amber, question number 1: true or false? Checking your own credit score will lower it.
False. It will not lower it, because remember, we are doing annualcreditreport.com, which is no inquiry to you and no cost to you. It is a free report you can check by yourself at home on your phone.
Okay. All right. Thanks. Yeah, absolutely. Okay. So question number 2, paying your bills late can hurt your credit score.
That
true
is
or false?
True. Absolutely true.
Okay.
Remember, that was the main thing that we talked about.
Yes, late
number
payments.
1, I'm talking about, this is 35%, which is the payment history.
It's a huge chunk of your credit score.
Chunk. The main factor that's running and controlling your credit. So yes, that is absolutely true.
Okay.
Making a late payment will absolutely ding your credit.
Okay. Perfect. Thank you.
Remember, 30 days is, I just want to add in there real quick, is more than 30 days.
More than 30 days.
More than 30 days is where it would ding your credit.
Okay. Oh, you almost made it. You almost made it. Okay. So question number 3. You need to carry a balance on your credit card to build credit. True or false?
Okay, so that could be, that is true. And this is why I'm going to say true, because once again, we want to show these bureaus that we can indeed borrow that money. Okay. Now remember, there's that 30% rule that we do not want to go past that 30%.
Okay.
But it is good to have that small balance on your credit, because that's the only way we can actually show the credit bureaus that, hey, we're going to pay you back. There you go. We're responsible.
Okay. Yeah. Perfect. Thank you. Okay. So question number 4, true or false, Amber? Closing old credit cards will always boost your score. Closing, keyword closing
yeah,
credit cards.
I caught that right away. You know what? We need to go back and talk about that. But,
yes.
That is false. Okay. Closing, you never want to close your credit card.
Okay.
It does not matter if you're not using it. I will never, ever recommend to close it. Okay. You keep that open. Don't use it. It's fine, but don't close it.
Okay.
It could actually hurt your credit score rather than help it. It will hurt your credit score.
Okay.
I've seen that happen.
Great.
Time after time.
Okay.
So.
Awesome. Okay. Last question. Yes. Question number 5. True or false, Amber? Your credit score can impact how much you pay for a mortgage.
That is true.
Okay.
So once again, credit scores manage or have a huge impact with your interest rate. If you have a great credit score, you have a great interest rate, therefore have a great low monthly payment. So
the higher your credit score, the lower your mortgage payment, or
the lower
your
the
loan
rate, the lower the payment.
Okay.
Yes.
Okay.
Yes.
Yay! Awesome. Okay, and we did it all in under 30 seconds.
Yay!
So awesome.
Simple, sweet, fast.
Yes, that's great. So again, thank you so much for being on this episode with me. I learned a lot. I hope our viewers learned a lot as well.
Yeah,
and I feel like there's maybe another
episode another.
So,
yeah.
I
think thank you for having me. Thank you so much. This was awesome.
Yes.
This is such a cool experience. It's it's my first podcast, and honestly, Guys, it feels like
It's not that nerve-wracking, right?
no. I mean, this is such a cool experience. I love it. Thank you for having me and trusting me to be on this episode with you. And like you said, we will have more in the future because there are a lot of things we need to. You said you're going to give me a therapy class. And I'm already looking forward to it.
I know. I already promised it. Real estate and lender therapy session.
Yes, therapy session. That would be a good one. No, but thank you for having me.
Absolutely. It was an honor and a pleasure having you. I think a lot of viewers got a lot of great information, tips and tricks, and if not, everyone out there, message, DM, call Amber Guzman, and she will be more than happy to answer any questions you have. There's no dumb question out there. I promise you, there's no dumb question. We've heard it all. We have heard it all, and we're always happy to answer your questions and help you get into your next home or your first home or your forever home. So it's exciting.
Give me a call. I can go. If you need a little bit more explanation as to, I didn't cover something in particular that you were, waiting for, I'm here. I'm here to help you. I'm here to set a plan for you. I'm here to guide you. And let's do it. Let's do it.
So I'd like to hear from you, from my viewers out there. What is it that you'd like for us to discuss next time? Topics, real estate topics, anything that you feel we haven't covered in the past. And we want to help you get into a home or help you and build a strategy. So send me a DM, send me a message, give me a call. Anything you'd like to talk about or like for us to talk about, I'm happy to bring in, any guests who will talk about tips and tricks on how to prepare for buying your next home. Yes, absolutely.
Yes, we're here to help.
Yes. Okay. So thank you so much, Amber. But I always end it with a question, a random question. All right. So if you ever had to, or if you could pick any celebrity in the world to go have dinner with, who would it be? And why?
I'm a married woman. Geez, you know what? That's an awesome question. I can't even think. I don't know. I think Carol G is my favorite right now. Carol G is just
okay.
She's my girl right now.
She's your girl. All right. And why would you want to have dinner with Carol G? Personalities match?
I think personalities.
That's what I see.
Yeah,
That's what I see.
Like I honestly feel like we do. How funny. And I mean, I don't know this woman personally, but I do feel like we would
I think you guys would make the perfect dinner day, girls' night out.
Yes, that would be. Gosh, now you have me thinking, dreaming. I guess.
I know. Well, hey, you never know.
Yeah,
you never know.
It would be Carol G.
Nice. Well, maybe we can get Carol G into her next home.
Carol G, if you hear this,
yes, let us help you buy your next home.
Yes.
All right, Amber, thank you so much, and I'm looking forward to our next episode together. And until then, keep kicking ass in the mortgage business and being one of Yuma's top lenders. So thank you. We appreciate you
so much. I appreciate you.
All right, love you, girl.
Love you.
All right.